Good evening, everybody. We are meeting again through Ranaweera Associates TaxTalk to discuss about the practical aspects of Finance Act number 18 of 2021, that is Amnesty Act. Through an earlier session, we discussed the technical aspects of this act in length. Therefore, today we will concentrate only on the practical aspects of this particular act. To facilitate this, I will first open the PowerPoint presentation. Practical aspects of tax amnesty, Finance Act number 18 of 2021. Now, before making a declaration, we should know how to apply this act, and the repercussions might arise by making a declaration. Only thing, we have to be hurry up because the due date, the last date is on or before 31st March 2021. On or before 31st March 2022. Now, first of all, we'll run through these important things. What is a tax amnesty? What's a tax amnesty is? It is some type of a tax pardon. Then, history of amnesties in Sri Lanka. When we take the history of amnesties, as we discussed through the earlier session, this is the 14th Amnesty Act in Sri Lanka under various tax matters. Then why a government is introducing tax amnesties? There are so many reasons for such amnesties. Out of those things, we will highlight few of those things. To bring more and more people into the tax net, or it may be to collect quick tax money to the government, or maybe to get increase the people, the widen the tax net, or maybe to get down black money which are not circulating in the day-to-day activities of the economic activities of the country, or even maybe to get down monies held by our people in abroad. Then we'll see factors influencing to make it a success. Now, in this case, one important thing is that the law has to be a perfect and a comprehensive law. Then the coverage and the declarant's confidence. The declarant's confidence should build up through the law, as well as it should cover all type of tax laws as much as possible. Then how often the tax amnesties are repeating? That is also important, because suppose the government is giving repeated tax amnesty, the people might think, rather than declaring this time, wait for the next amnesty. Then user friendliness. Now this time, of course, this particular act, to make it more user friendly, they have given even the declaration formats and the guidelines in the act. Then genuine, only thing, once they offer this type of amnesty, genuine taxpayers may not be happy, because they may be paying 28%, 24% or 40% even. But for this amnesty, this time they have to pay only 1%. Now, under this note, I have included the comprehensive note into this, but I am not going to discuss everything, because as we discussed through the previous session, I will concentrate mainly on the practical aspects. Anyway, to whom this act is applicable and on what, that is very important. That is the charging section. Now, if you'll see the charging section, it says this act applies to any person who has not disclosed any amount of taxable supply, income or asset. That means there should be two conditions. There are two conditions. One is that who has not disclosed. It has to be an undisclosed income. And it has to be a taxable type of, not exempt. Taxable supply word they have used for to cover up the VAT. Then the taxable income or taxable asset, which was required to be disclosed under the laws specified in Schedule 1, that is income tax and VAT, in a VAT return for any taxable period ended by 31st March 2020. This act covers only up to 31st March 2020. Now the word term person is defined to have the same definition as for the Inland Revenue Act. Therefore, it includes individuals and entities. Entities includes companies, partnerships and trusts. Right. Then term the taxable asset. Now by reading the word taxable asset, we can see that the word taxable asset is not much relevant. The taxable asset, the term taxable asset may not be much relevant. But in this law, they have used the word taxable asset. Taxable asset. What is this taxable asset? Under the present law of Sri Lanka, there's no wealth tax for years. In Sri Lanka, no wealth tax for years. As there's no wealth tax for years, why they have included the word asset? I think what they have meant by this asset is the assets acquired by investing taxable supply money or taxable income. Undeclared taxable supply or undeclared taxable income, if they have already acquired an asset, those assets are covered here. Then before making a declaration, see whether following conditions have been fulfilled. If you are interested of making a declaration, first you have to see whether you have fulfilled this requirement. One is it has to be undeclared income, and it has undeclared thing, and it has to be a taxable thing. Both conditions to be fulfilled. Then what covers with this law? First we have to see what are the things covering with this law. It covers undisclosed taxable supply, then undisclosed taxable income. Taxable supply, as I mentioned, it is something to do with the VAT. Then taxable income is something to do with the income tax. Then the last one, undisclosed taxable asset, as I mentioned in the law, it is not much relevant. What they have meant by that is the assets representing with undisclosed taxable supply or undisclosed taxable income. Saying that, I would like to see who are the persons this particular law is not applicable. This is if there are any investigations or legal proceedings are pending. Pending investigations and legal proceedings are there under, there are 4 acts: money laundering, then the terrorist financing act, then the bribery act, then the narcotic and drugs act. Under any of these acts, if there are any pending legal investigations or proceedings, then that particular person can't apply. Then the second category, you have to see whether you are in these categories before making a declaration. The second restriction is, so that particular person, whether that person who has been convicted of an offence under the above X. Now the first one pending, the second one already convicted. Then the third limitation is any amount of undisclosed taxable supply, income or asset held by that person in respect of which an assessment has been made. If the assessment has been made, then you can't apply this particular law. Therefore, before making a declaration, we have to see whether we are or the declarant, the prospective declarant are disqualified under these three categories. Pending legislation and proceedings, then already convicted of an offence, or assessment has already been issued. Suppose you are not covered with these three limitations, then you can make a declaration. Then before making a declaration, you have to fulfill the certain tasks before making a declaration. If you want to make a declaration before 31st of this month, you have to make the declaration 31st March 2022. Then in that case, when you are making a declaration, first of all, either you should hold assets as at 15 September 2021. This 15 September 2021 is the date of passing this act. As at this particular date, if you had these assets, then you are qualified. Then the second category, if you didn't have that type of assets, now you can purchase. If you had money, if you had any money, now you can either purchase these assets or you can deposit in a bank account. Purchase or invest such amount in the assets. What are the assets? There are four categories of assets. You can buy shares of a resident company, treasury bills or treasury bonds, then any quoted debt securities, or any movable or immovable property in Sri Lanka. Now, if you'll see this movable and immovable property, that is the general meaning is there, but under the movable property, they says excluding money. That means anything other than money covers with this property. Immovable and movable property covers anything other than money, right? Then deposit in that amount, either you can invest, purchase or invest in these four categories, or you can make a deposit in the bank. You can make a deposit in the bank and make a declaration. That means whatever the assets you hold, including any bank or whatever the deposit, as at 15 September 2021, you can make a declaration. Or you can, now here this holding assets mean it includes any type of asset other than money. Any type of asset. Deposits with bank, deposits with financial institutions, gem, jewelry, vehicles, land and building, anything, right? Then, but if you had any money as at 15 September 2021, then you have to go and invest in shares, treasury bills, quoted debt securities, or movable or immovable asset. Or if you can't invest immediately, then you can go and deposit in a bank. Now in that case, it has to be a bank, not financial institution in this case, right? This movable property, as I mentioned, only one item is excluded, that is the money, right? Then the tax to be paid by voluntary declarants. The person who is making a declaration, once you decide, then once you are qualified to make a declaration, next step what you should do, as I mentioned, if it is in money, you have to go and invest somewhere, either in bank or by these assets. Then once you fulfill that investment category, depositing or investment category, next step is to make the payment. What's the payment? That is 1% of that value. Now in that case, if it is an asset held as at 15 September 2021, now, but the first we'll say take the money held as at 15 September 2021, because the movable and immovable property won't include money. Therefore, they have separated the money. Then, if you had money as at 15 September 2021, thereafter you can invest in one of those assets, or you can go and deposit in a bank. Then the actual cost of that investment, you can take as the base value, and on that you have to pay 1%. But second category, if it represents the assets other than money, any asset other than money held as at 15 September 2021. By 15 September 2021, you have already purchased or invested in some other movable or immovable asset. In that case, you have to now when you are declaring, before making a declaration, you have to pay 1% on the market value as at the date of declaration. Now in this case, the second category, if it is immovable property, shares or anything like that, even movable property, you better obtain professional valuations for these things. That is very much important. Right, you have to obtain professional valuations for those things. Based on the professional valuation, you can make a declaration. If it represents shares in a non-quoted company, then in that case you can get a valuation report from the auditor of that company. But even in the case of auditor, if there are immovable property involved in that company, then the auditor may have to obtain a professional valuation from a certified valuer for those immovable property. Right. Now, in this part, certain words are not much clear. Actually, in this law, there are so many the clarity wise, it is very weak. This law is very weak in clarity wise. Now, even in this case, certain places are not much clear. Now, especially section 3.3 part B, if you take the act, you can download the act and see section 3.3 part B seems to be not much relevant. It is not much clear. It is advisable to, as I mentioned, it is advisable to obtain proper valuations, say from the auditor of the company for private company shares, then certified valuers valuation for various immovable properties. Likewise, better to obtain valuation report to arrive and prove the market values. Then the next thing, before making the payment, you have to be very careful, because this payment of 1% is not refundable. Suppose you make a payment by mistake, you can't ask for a refund of that money. Therefore, you have to be very careful. If you want, best thing is to consult your tax consultant or consult the Inland Revenue Department officers in the secretariat who are handling this matter. Right. Then the imposition of this voluntary declaration, then under this, now once you pay the money, once you make the payment of this 1% tax payment, next step what you should do is to submit a declaration. To support the submission of this declaration formats are given in the act itself. For entities, there's a separate form. For individuals, separate form. You select the correct form and fill that form and submit to the Inland Revenue Department along with reasonable documentary evidence to prove the things what we are declaring. The Commissioner General has issued, in addition to that, Commissioner General has already issued a guideline You can get downloaded that guideline and follow that. Then the Commissioner General shall verify. Now once we make a declaration, Commissioner General shall verify, not checking. It is not checking. What he should verify whether the declaration is in accordance with this act. He need not to investigate into this, need not to check all the things. What he has to do is to verify whether the declaration is in accordance with the act. Why they have included like verification instead of checking? Now verification whether the declaration is in accordance with that, that is to facilitate, to make it more simple, to attract more and more declarants, right? Then if satisfied, if the Commissioner General satisfy that this declaration is in accordance with the law, he should accept it within 30 days. If he is not satisfied, if he feels that it is not in accordance with the law, he should reject within 30 days. If he'll reject within 30 days, the declarant can submit a new declaration, fresh declaration within another 30 days. Right. Suppose the Commissioner General failed to acknowledge the receipt, then you can assume that he has accepted it. Right. As per the wordings of the law, the Commissioner General is not supposed to verify the accuracy of the information. That is very important. Though it promote more declaration, it might open for malpractices. Now this type of things might open in for various malpractices, because the Commissioner General is not authorized to check with so many other things. Only what he should do is to see whether it is in accordance with this act, right? However, declarant should know that false or incorrect declarations is by making false or incorrect declaration, you are losing the immunity what you are expecting. Therefore, you have to make the correct information. You have to give the correct declaration. Then the a declarant whose declaration has been accepted and paid the applicable tax is entitled to the full immunity. Now we will see what are the immunities. One is liability to pay any tax, penalty or interest. He need not to pay that particular tax, penalty or interest. Then immunity from any investigation, no further investigations. Next, no further prosecution under the Inland Revenue Act. But those pending people can't apply as we discussed, right? The period covered with this immunity, we'll see up to which date it is covered. In the case of income tax, it covers up to 31st March 2020. In the case of VAT Act, it covers up to 31st March 2020. Both up to 31st March 2020. I would like to give a small remark on this declaration. The poor clarity of this section of the law, actually this section, the section 6, the clarity is so poor. This, due to this poor clarity of the law, might create a lot of uncertainties among the prospective declarants, result in the discouragement of declaration. Because now when the declarants are not much comfortable, they will refrain from making declaration, right? Now under this, as I mentioned, the commissioner, now once the Commissioner General receive this declaration, he should maintain the absolute secrecy of this declaration. Absolute secrecy to be maintained, right? Then he shouldn't leak this information to anybody else, right? If he'll do that, he is responsible for that. Now, I have given a small remark, though it is obvious that no need of stating that section 8 of this law is a forcing section. This section 8, it says, where any person to whom this part applies fail to comply with these provisions of the Act, he shall be liable to be dealt in terms of the provisions of this respective law specified in this schedule. That means it is forcing the people to make the declaration. That is not correct. Right. Now, this is a small summary what I have explained. Steps to be taken under the part 1 of the Act, because this Act has two parts. What we are discussing in part 1 today, the part 2 I'll be just covering it. Right. Under the part 1, what are the steps to be taken? A person, now suppose you feel that it is better for you to make a declaration and you are entitled to make a declaration, then what are the steps you should do? Now, to enjoy the immunities, you should during 15 September 2021 to 31st March 2022, that is, this is the Act passing date till 31st March 2022, either you have to invest in or purchase shares of a resident company, treasury bill, treasury bonds, quoted public companies, debentures, or any movable or immovable asset in Sri Lanka. Either you can purchase during this period, or deposit in a bank account, right? That is one option. Then the other thing, alternatively, suppose you have already purchased these things as at 15 September 2021. By 15 September 2021, instead of money, if you have already invested, then you can declare those movable or immovable assets. Whatever the movable or immovable assets you can declare. As I mentioned, into this movable asset, only thing which they have excluded is money. Therefore, this first part covers money held as at 15 September 2021. Then you have to purchase these things or invest. Or if it is not money, then you can make a declaration on that. Then that is one thing what you have to decide. Then thereafter you have to make a payment of that 1% tax. As I mentioned, this 1%, anything invested after 15 September 2021, you have to pay that 1% on the cost. But if it is invested prior to 15 September 2021, you have to take the market value, current market value, and pay this 1% on the current market value. Then after that, you have to submit a declaration on no before 31st March 2022, only 6 days or 5 days more for you to make a declaration. Therefore, please be hurry up. If you want any clarification, please consult your tax consultant or the officers in charge for this in the Secretariat section of the Inland Revenue Department. Then this law, I have listed certain malpractices, possible practical issues in this. There may be certain practical issues in this, because in certain cases for certain assets there will not be proof documents available, like gems. The proof documents may not be there. Then we'll make in a small, sometimes some people might misuse it. They might disclose a small amount, pay 1% on that, but they might try to cover some other assets as well. Then next thing, If the understated taxes have been reinvested in business, now in certain now actually we saved some money by not paying tax. If it is the situation by now, it may be in cash or maybe in deposit or maybe in various assets of the company. It is very difficult for you to separate those things and make a declaration. Now in this case, definitely you have to consult somebody to help you. Then, in a situation as above, can an individual or entity declare its net assets? Now, in that case, what they have to do is to declare the net assets held as at 15 September 2021. It's very difficult. Then, declaring some people might make declaration the bogus investments as declaration. Now with that, what will happen? They might cover the subsequent period income also with this declaration, because this amnesty covers only up to 31st March 2020. By now, another 2 years has passed. Then some people might cover up these 2 years' income or even future income by making a declaration as earned prior to 31st March 2020. Then part 2 of the act. I'm not going to cover the part 2 of the act in detail because that is well covered in my previous session. Now this is for this you need not to make any declaration. Automatically the Commissioner General should grant you these immunities. Commissioner General should grant you immunities. Now under this, anyway, I have included these slides also into this for your easy reference leisurely. Now, in this case, the individual's income taxes are covered if the individual's assessable income is less than 3 million rupees for the year of assessment 1920. For 1920 year of assessment, in the case of individuals, the assessable income, if it is less than 3 million, they are covered with that. But there are certain conditions, as I mentioned. His total turnover should not be more than 500 million, and the business should not be betting and gaming or business of liquor. Those businesses are not covered with this. We'll just run through it. The Commissioner General can write off penalty or interest of person. Suppose that person is settling his full tax amount. If that person is settling his full tax amount, the Commissioner General full tax amount before end of this month, before 31st March 2022, then the Commissioner General shall write off the penalties and interest on that. That is applicable not only for income tax but also for VAT. Therefore, if you have any outstanding income taxes or VAT, better to settle those things before end of this month to enjoy the immunity on penalty and interest under this section. Now, even in this, the section 14, the English version of the act, there's an error. In that case, you better read the Sinhala version, right? Then, if there are any pending refunds, now suppose this particular person is having any refunds from the department, then before settling the refunds, they before writing off those penalties and interest or even income tax, they have to set off that against those refunds due, and you will be getting only the net amount, right? Then those are the important things with that. In these slides, I have included the acts covered with this law. Schedule 1. Schedule 1 covered the Inland Revenue Acts, all three past Inland Revenue Acts. Act number 28 of 1979, then 38 of 2000, 10 of 2006, and 24 of 2017. And value added tax number 14 of 2002. Then schedule number 2 covers those money laundering, terrorism, bribery, and narcotic traffic and narcotic acts. Then schedule number 4, I have included the 3 in the next one. Betting and Gaming, Finance Act, Stamp Duty and Stamp Duty Special Provisions Act. Then schedule number 3, there are two parts, A and B. Actually, these three, schedule number 3 covers so many very old taxes, old wealth tax, turnover tax, surcharges, NSL, National Security Levy, and GST and debit tax. Likewise, so many old taxes are covered. Now there's one item, the value added tax. Certain special value added tax are covered. But according to this law, you have to be careful. Any value added tax what you have collected from the other party is not covered. Therefore, when you are making a declaration for income tax, if you are a VAT registered person, you have to be very careful about that, because you may be making a declaration for income tax, but if you are a registered person and if you have not settled the VAT properly, then you might get caught for VAT non-payment, because it says if you have collected from the other party, no immunity for that, you have to pay it to the government. That means if you are a registered person and if you have issued even commercial invoice, it is assumed that you have collected VAT. If then in that case you have to prove that you have not collected. If you are to prove that, suppose somebody else is selling that item for 108 rupees or at that time 115 rupees, you have to prove that you have sold it for 100 rupees. It's very difficult. It is very difficult for you to prove that. Therefore, you have to be, before making a declaration, you have to be very careful about that. Then in the act, you get all these formats of declaration. There are two types of declaration formats. Two types of declaration. This first one, see, tax on voluntary disclosure. This is for the individual. This is for the individual declaration. These red color ones are my notes. The other things are the declaration format included in that. In that, now you have to code the national identity card number. Before making a declaration, if you don't have a TIN number, you have to obtain a TIN number, because that TIN number is required for you to make the payment. But the TIN number you need not to include here, that is there in the pay-in slip. Then identity card or passport, then your name, passport number, address and all in this number 1. Number 2, if you take the serial number, that means if you are declaring several items, you can put 1, 2, 3. Then type of taxable asset, this is an error in the law. This type mean it is not the type, it is not the source of income. You have to be careful. You need not to disclose the source of income. Here what you can say, bank account, treasury bills, then company shares. Likewise, you can declare the asset. If you don't, if you want to attach a schedule to match with this note, you can prepare a schedule and put here refer schedule. Then place, that means now definitely you need not to declare the source of income. Here the type mean whether it is taxable supply or taxable income or taxable asset, right? Then place of the taxable supply, that is the, if it is a immovable property, the asset, or if it is a bank account, which bank, which branch and all. Then quantity or account number. In the case of a bank, you can quote the account number and all. Then the amount, that is here, it is either amount or market value. That means if it is a new asset purchase, you can put the cost here. If it is an asset purchase prior to 15th September 2021, then you have to give the current market value. then you can take the total market value, total of this. On that you have to pay 1%. And next column, you have to give the detail of this investment. Money declared above. If it is money declared above, what you have done with that money? Now, if you are declaring money as at 15 September 2021, you have to fill this. In that case, you have to fill this. If it is shares, you have to give those things. Treasury bills, treasury bonds, you have to give. Then other immovable properties, you have to give the details. And bank accounts, you have to give the details. Then the next is your certification. I have paid the 1% payment. Then you have to give the payment details. Payment details. There's a special payment pay-in slip. You have to fill that, and there's a special code number that is also given in this guideline. Then you can quote those code number and make the payment. Then this is the statement what we are giving. Then you have to sign it, go and hand over to the Secretariat Department of the Inland Revenue. Only unfortunate situation, immediately they are not giving you an acknowledgement. After a couple of days, they are giving you acknowledgement to say that they have received it, but that is not the proper acknowledgement. Then within 1 month, they are supposed to give you the result of that, whether they have accepted or not. This is the same type of a form, but this is for entities. This is for entities. Same type of a form. Then second page of that, then this is the guideline. They have given the guideline. You can read these guidelines as I have given in my presentation. You all can read these guidelines, or these guidelines you all can get downloaded from the Inland Revenue Department website and read those things carefully. Then in addition to this legal requirement of the guideline, the Commissioner General has issued an explanatory note also. That is not a legal requirement, but he has done so. That is also you all can read and try to understand that. That is also there in this. Right. I think I have covered everything. Only thing what I have to stress is that only very few days more before before 31st March 2022, you have to make the declaration. Suppose they reject it, you can make the fresh declaration thereafter. But for a new person after 31st March can't make a declaration. Right, you have to be hurry up now. I think I have explained everything to your satisfaction. Thank you very much for your following this video clip. Thank you.